CNBC-TV18 is entering its 25th year this week, and the management in focus right now is Cummins. Well, a rather mixed set of numbers for the past quarter. Revenue was impacted, though, due to weak export sales. Mr. Ajay Patil, the VP and Chief Financial Officer India at Cummins India, joins us on the show. Hi, Mr. Patil. Good morning, and thanks so much for joining in, and thanks so much for being part of our journey. About a couple of aspects of business, though. How much of the CPCB2 inventory is still sitting on the books, or is that completely cleared out? And also,
I think it's been a remarkable journey. So, wish you all continued success. I think there is an extension of time which is granted till June of 2024, which means both emission compliant products will be meant that pre-buy inventory to a certain extent got liquidated in the quarter, plus some is getting flushed out as we speak. And the second question on the price CPCB4 Plus is, I would say, because although we have all the product range ready and made available in the market, the quantum of increases is something which is to be fully discovered.
Okay. All right. Got that then, Mr. Patil. So some kind of uncertainty, maybe for a couple of weeks or a couple of months before we get better trends on that front. Let's focus on exports, though. There was a bit of a hit in the last quarter itself. But what stood out was the HHP exports. Out there, you did see growth, and that was a little bit unusual. Now, given the global commentary on EU slowdown, do we expect to maintain this sort of a growth on HHP exports? And similarly, what's your view on LHP exports?
Yeah, I think on the HHP exports, when we see it in the context of a half year, I think we have grown 9% there. And we have anticipated some sort of a slowdown in the Asia-Pac region, which did occur in line with what we had seen. However, the rest of the geographies have kind of hold on to the demand as far as the high horsepower segment is concerned. I think on the low horsepower, we were anticipating a slowing down primarily coming from Europe and Latin America region. And that is the reason that particular line of business on the low horsepower side, we expected and anticipated a softening of demand, which did turn out to be the case for the first 6 months. And the attribution of softness is a function of what's happening to those end markets. And that, I think, is the reason why the demand is softer on that side.
Just one question, sir, on exports, then put it together, low and as well as high horsepower, put it together. You expect to maintain this run rate of at least 500 crores, given the challenges as well on a quarterly basis? Can it be a little bit higher?
Yeah, our endeavor is, of course, to, it's a very important piece of our revenue profile with respect to how we balance our revenue between domestic and exports. So we, of course, continue to believe that we have the right product. We have a fit for market strategy for each end market. That strategy has worked. And we continue to make those efforts to see that we win the fair share of market as far as our exports are concerned.
30%, I think, right? Revenues or exports. Mr. Patil, hi, good morning.
Hi, morning.
In the conference call, you said that revenues will grow 2x growth, India growth. On a lighter note, maybe only half joking, but growth is now almost 8%. So you want to bump up your own revenue growth guidance?
Well, I mean, if you see it in the context of where we are from a H1 perspective, I think we've grown 13% on a 6-monthly basis. Our guidance was that we grow 2x of GDP. So we are keeping pace. Obviously, understand the expectations that we need to sort of continue to do more. And I think that's well understood. And we make all our efforts to see that we sustain our growth momentum, what we have experienced in the last 6 to 8 or 12 quarters.
You've also guided, sir, for 100 basis points of margin expansion in FY24, given your strong focus on cost management. But keep a longer-term trajectory on margins, this cost management exercise, will it extend into FY25? What is the eventual guide and improvement from here?
Yeah, I think what you have seen, how we have delivered in the last 8 quarters or so, I think we continue to take efforts, and through a combination of what we have been constantly speaking is a 3-pronged on how we drive a volume leverage with respect to our prudent with our cost management exercises. And pricing has something which we have been very tactically positioning in order for us to continue to get the value. All of these factors, when you put how we are PBIT growth has been on a 6-month basis. I think on a 13% top line growth, our PBIT year on year has grown 38%. The 100 basis points guidance per se, it's how we think the profitable growth should be growing 2x of GDP as a guidance, then it should translate. So that's how it is. It's really not a guidance per se. But our endeavor is there that year on year on the commodity side plus the volume leverage, we are able to.
In terms, just to go back to the top line thing, I think you also mentioned that you were expanding the product sort of profile, right? That is another area. You're saying you're pretty close to all of these, and what's the total addressable market for you in your product category?
Yeah, just to clarify, I think on the Vande Bharat train, we haven't provided businesses that we have, and the markets that you referred to are what we call generally are % year on year. It has an element of a bit of a type testing and other approvals come through from the customer. But the end markets in that were quite optimistic about these end markets holding up. Government's emphasis on infrastructure is, and we believe we have the right product and it bodes well from an end market perspective.
Mr. Patil, for the year, just to reiterate, double-digit revenue growth points better in the second half in comparison to what you've seen in the first half?
Getting started with your first question, I think on the supply side, as we stated on the components, which are currently still in what we call managed demand, but that is not impacting any order statuses or any of those impact as a result of supply chain. Only thing the revenue gets deferred. Number two, with respect to the guidance on GDP, I think that continues. I think we are holding that guidance as we stated on the conference call. The half-yearly results are certainly in line with that guidance. And that's what 2x of GDP growth rate from a current year perspective. On the margin side, as I just comment, I think our endeavor is a profitable growth, and the profitable growth indicative of the margin. How specific, how many bips of margin expansion, I won't be able to specify. All I can say is that that's how we are looking at in terms of how we grow profitably.
And the endeavors to gradually move towards 20%.
Well, I mean, we continue to sort of do our best. Won't necessarily provide any guiding comments, but profitable growth is what we really focus on.
Got it. What about industrial and distribution? That's a segment which is growing well for you. Can you share the outlook?
Yeah, I just made some comments about the industrial business, and you asked about our distribution business. That's really that is something which has done well. I think on a half-yearly basis, it's up 26%. I think this is 3 years in a row what we have seen that this business has really done well. There are multiple different ways that we are looking at our services business today, right from the annuity side of the business to the parts and services. And the reason we are able to maintain this high growth rate for 2 years in a row is primarily because we possibly have one of the best service infrastructure in the country. Our guaranteed response time is 4 hours nationwide in terms of how we serve our customers. Our goods are capital goods for the customers. They are productive tools for our customers. So we are very, very sensitive in terms of how we provide responses to our customers or service calls because they add to customers' productivity. And I think that is getting well responded in terms of how our customers look at us in terms of our service standards, the quality of service we provide. And that's the reason we maintain that trajectory.
All right, Mr. Patil, we'll leave it there. Thank you very much for your time, sir. It's a pleasure having you with us here this morning and speaking with you. Thank you.